Hey, it's Jeff Cohen here in New York City. The Fed funds rate increased 75 basis points yesterday, and I'm going to cover what this means for mortgage rates and what this means for Manhattan home prices. For those that don't know me, my name is Jeff Cohen. I'm a real estate agent in New York City, helping people sell and buy apartments in Manhattan. So what does this mean for mortgage rates? The answer is that rates will likely increase, but the extent to which they increase is not necessarily a direct correlation. The way mortgage prices are set is based largely on the 10-year U.S. government bond, also known as the Treasury note. This rate is used as a benchmark for all different types of loans, including mortgages. As the Fed signals higher rates, the 10-year moves higher. This in turn pushes the average 30-year fixed rate mortgage higher. I'll be posting a graph in my blog so you can visually see what I mean by saying it's not a direct correlation. So just head over to jcny.com/blog for more information on that one. But really what you guys want to know is, what does this mean for Manhattan home prices? We didn't see a meteoric rise in prices like the rest of the country, and we are not seeing anything to indicate a meteoric fall in home prices in Manhattan. And I'm going to give you 4 points to consider and then provide my analysis. So, point number 1. According to a statistic from Jonathan Miller Samuel, about 50% of home buyers in Manhattan are all cash buyers. So 50% of the market is largely unaffected by rate increases. Point number 2. Of the remaining 50%, about 9 out of 10 home buyers in America have mortgages that are under 5%, which is close to where we are today at 5.78%. Point number 3. Right now, employment numbers are still at all-time highs. High employment numbers typically lead to rising or stable home prices. Point number 4. Rental prices are skyrocketing in Manhattan, which is pushing people to buy. So to synthesize these 4 points into something that you can understand, the Fed has announced that it will continue to raise rates, which means that mortgage rates will likely continue to rise. So what happens when mortgage rates rise? It usually lowers the supply of homes hitting the market, because homeowners, they don't want to lose that great rate on their current home, or maybe they're concerned about what they're going to pay when they move. So all things constant, lower supply leads to higher prices, especially here in Manhattan, where there's so many all cash buyers. So what I'm saying is that when we assess all the different economic factors, it looks like absorption will be a little slower because we have skyrocketing rental prices and high employment. So I'm expecting that we will see sales softening, but not necessarily prices softening. I'd say if you're a buyer, prepare for the possible opportunity through just after Labor Day, especially if it's an estate sale or a situation where someone has to move because of a life-changing event. However, I would caution buyers because we are not seeing an indication of a fire sale. So if you wait too long and prices increase, remain flat, or if prices do not decrease at the same rate that mortgage rates are increasing, you could be paying a lot more by waiting. Now, if you are a seller, you may have missed the opportunity to sell during the January to April frenzy, but as long as you're a little flexible on price and have patience, you're still in good position as buyers pull forward that demand to beat out higher rates. So if you had any thoughts of buying or selling a home in Manhattan, or just need real estate advice, message or call me today. Again, my name is Jeff Cohen, a real estate agent in New York City. And if any of this resonated with you, please like, comment below, or share this video. Thanks a lot and have a great day.